this could seriously impact your income. If you're earning income through online payment processors like PayPal, Stripe, or Venmo, or even if you're using online marketplaces like eBay and Etsy to sell goods, this is for you. In today's episode, we're going to be talking about the new 1099K threshold changes that you need to know about. If you're wondering what in the world does this mean for you, you're in luck, because by the end of this video, you're going to understand exactly what you need to do and how it could impact your taxes this year. So grab your coffee and let's get into it. Now, before we jump into what's new for 2024 and 2025 and even 2026 and beyond, let's rewind a little bit and talk about what a 1099K actually is. Now, you've probably heard of a form like a 1099 or a 1099 NEC, right? Those are things that you are sent if you're a service provider and you do work for a company and you do more than $600 worth of work. You're probably going to get a 1099 NEC or 1099 NEC from them. Now, the purpose of any 1099 is to do the same thing. It's to report income to the IRS. So yes, you are getting a copy of that 1099, but one is also being filed with the IRS, so they know exactly how much you made. So for those of you who are contractors and have gotten 1099s before, you know that if you made over $600, you expected to get a 1099 from the company that you worked for. And even if you didn't get that 1099, you were still required to report that income. So that's an important thing to remember, is that regardless of whether you get a 1099 from a payment processor or somebody you worked for, you are still required to report any and all taxable income to the IRS on your tax return. But the purpose of the 1099 is to make it a lot harder for people to hide income, because the IRS already knows what you have made, or at least a portion of what you have made. And that means when you go to file your taxes, they're going to look and see if you are reporting less than the amount of income that they know you made based on the 1099s that were filed with your Social Security number or EIN. So what is a 1099K and how does it fit in here? Well, a 1099K is like a 1099, but it's sent by payment processors. So if you are processing payments for goods or services, right, through a payment processor, this is how the payment processor tells the IRS how much money it paid out to you. Now, for years and years and years, the 1099K threshold was $20,000 or 200 transactions. So if you made less than $20,000 through a particular payment processor, again, this is total from all people that are paying you through that payment processor. If it was less than $20,000, you didn't get a 1099K. Now, if you were doing this for profit, then you still should have been reporting that income regardless of whether you got that 1099K. But again, you probably didn't get anything at the time. So what changed? Well, as part of the American Rescue Plan Act of 2021, they actually changed those rules. So Congress changed it such that a 1099K threshold was the same as any other 1099 threshold, which means it's $600. Now, I did a video on these new changes over a year ago because that's when the changes were supposed to come into effect. But there was such an uproar that it did not happen. And instead, they decided to take more of a phased approach to get to that. I think they finally realized that going from a $20,000 threshold to a $600 threshold would be a lot, not just on people, but also on these companies that process these payments. So what is the current threshold for getting a 1099K? Well, if we're looking back at 2024, then anything that was processed through those payment processors, you will get a 1099K for in the beginning of 2025 if your total with that one payment processor is over $5,000. So it didn't go all the way down to 600. It did go from 20,000 to 5,000. But again, if you have very small sales going through these, this shouldn't really affect you. However, if you were in that middle ground, then you may start getting a 1099K when you previously didn't. And then in 2025, for this 2025 tax year, where you will get a 1099K next year in early 2026, that threshold has been lowered to $2,500. So they're cutting it in half again for 2025. And by the time we get to 2026 and those payments that you're doing in 2026, you are going to get a 1099-K in early 2027 if you processed more than $600 with that payment provider. So they are stair-stepping this in over a 3-year period. So why is the IRS making this change? That's probably pretty obvious. They're trying to close the tax gap. So they are trying to make sure they're collecting on as much as they can and that people are not evading taxes. So by reducing that threshold, then that means the IRS is going to be aware of the money you're making through these really popular payment platforms, things like PayPal, like Venmo, Stripe, Square, anything like that, or even like Etsy, Shopify, eBay, anywhere where you're getting payments processed. Now, one big misconception here is that if you are occasionally using Venmo, let's say for friends and family reimbursements, that you are somehow going to have to end up paying taxes on that amount. And that is not true. In general, PayPal and Venmo and different payment processors like that are going to try to determine exactly what is a business purchase versus a personal purchase. So most of the time you can denote that when you're using the app, whether it's goods and services or friends and family. You're not going to get a 1099-K for friends and family. However, that does not mean that you should use friends and family when you are really selling goods and services. And you also likely will not get a 1099-K for a personal PayPal or personal Venmo account. So pay attention to how those accounts are set up. If you are using it to transact business, then you want to have a business account. If you're not, then a personal account is probably going to work best for you. And the other way, just to make it even more clear, is when you're writing the descriptions, when you are paying someone, make sure it's really clear what it is for, so that if you are ever challenged, that you can prove, hey, this is what this payment was for. I was just, paying my roommate for the electric bill, right? So you're not going to get any kind of 1099-K for that. Now, if you get a 1099, any kind of 1099, and you don't think that you should have, what can you do? Well, I'm going to show you what the IRS says. I've linked that down below. But ultimately, the first thing you do is reach out to who issued the 1099 to you, whether it's a 1099-K, a 1099 NEC, anything like that. And they should be able to help you correct that. They can file an amended version. So if they need to zero that out on their side, that's something that they can typically do. So that's the first thing you want to do if you get one that you don't think you should have gotten. Now, if you reach out to the processor and they won't give you, or you can't get a hold of them and you can't get a amended 1099, then you don't want to just ignore it. Again, that could be an audit trigger because the IRS is looking to see if you reported all of the income that they already think that they know that you have, right? So ultimately, you can fix this on your taxes. So I'm going to show you here how this is going to work for a few different scenarios of how you're going to report your 1099-K, whether it is on purpose or an error. Here's what you're going to do. So this is Schedule 1 of your 1040. You can see right here, this is where you're going to be reporting all of your additional income, and this is where your 1099-Ks are going to show up. So in general, you're going to record those 1099-Ks down here in the other income. So when you list the type, you're going to say 1099-K, whether it's maybe for personal items. If it's for personal items, you can say 1099-K for personal items, or let's say you got it in error, you can say 1099-K received in error, but you're still going to report the amount here in that row 8Z. Okay, do not leave it out. You want to include it there, but I'm going to show you what to do next. Now, if you scroll down to part 2 of this schedule, you're going to come down here and see a Z down here for other adjustments. Okay, so this is where you're going to essentially balance out the costs. So let's say you sold personal items and you recorded that. And maybe they're just personal household items, and you know that you actually paid more for them than what you sold, but you still got a 1099-K for it from Venmo, right? Here's where you're going to put the cost. So you can just say cost of personal items, and I would even put cost of personal items dash sold at a loss or something like that. And what you'll do is actually zero out that amount. You don't have to record a higher number, right? Let's say you made $5,000. Well, you can just put $5,000 here, and essentially that zeroes it out, so you're not going to be taxed on anything. So it's really just something you report, but then you back it out on your tax return. But by reporting it, you don't put up a giant red flag to the IRS that says, audit me. Now, similarly, if you got the 1099 in error and you reported it up here on line Z, then down here on line Z, you're just going to report the exact same number and say 1099K received in error and zero that out, okay? Or for instance, let's say you sold tickets to an event. So I have Titan season tickets, for instance, and I've never gotten a 1099K because I've never made enough to get a 1099K on it. However, if I were to sell those tickets and make more than the threshold, which is likely once that threshold goes down to just $600, right? If I get a 1099K, then here is where I would put the cost of those tickets, right? So most of the time I'm going to sell them at face value. So ultimately I'm going to net zero, but maybe I sold them a little bit above. So maybe I paid $500 for them and I sold them for $700. Then ultimately I'm going to be taxed on just the $200, not the full $700. So the way that would show up is up here, I would put in the amount from the 1099K, which would be $700, the full revenue that I received. They don't know, right? The payment processor themselves doesn't really know what my cost basis was. So they're not going to put that on the 1099K. I have to do that. So that's where I would come in here and report the full amount that I got on the 1099K up here, and then back out the actual cost. The better documentation you have, the more likely it will hold up under audit. But again, there's usually going to be a threshold here. So if you're literally just selling some of your old personal goods and things like that, they're probably not going to look so deeply into this and ask you for receipts for that table you bought 15 years ago or those baby clothes that you sold to a neighbor. There has been some misinformation that they're going to require receipts, and that's not actually the case. Obviously, that's the best proof if you're audited, right? All of this only comes up if you're ever audited. But if you are, then having some kind of reasonable ways to be able to estimate what you paid should work, right? So again, that is totally fine. It can be a little bit of extra work. It can be a little bit of extra hassle, but it doesn't mean you're going to start now all of a sudden getting taxed on, your neighborhood buy sell trade page. So is there reason to freak out? In my opinion, no. There is no reason to freak out about this. I know that changes can be frustrating, especially when all of a sudden you start getting forms you never got before. But thankfully, we have some time before this goes all the way down to that $600 threshold. And it's a really good time to just make sure you're organized with your finances. So whether you are a business owner, a freelancer, or a side hustler, it's still really important to make sure you're tracking all the money coming into your business or your side hustle and all the expenses going out. Because remember, we can deduct those expenses against the income to reduce the amount of money we pay taxes on. So I highly recommend getting organized. If you want to use a software, I just did a video about my favorite accounting softwares to keep you organized. Go check that video out. Or you can even do it on a spreadsheet. I have one that you can grab for a low one-time cost only. So that's linked down below as well. But no matter what the IRS rules are, it's a great idea to just stay as organized as you can because anybody can be audited and you're gonna want to have your ducks in a row if and when you ever are. And the last and final tip that I have for you is to make sure that you're setting aside money for taxes. Remember, if you're making money, even if it's a small amount of money, right? If you're making income after you subtract your expenses, that's gonna be taxable income. And so you wanna be putting aside money to be able to pay for that, right? Even if you're just making small profits off of selling NFL tickets. So if you're curious to learn more about this, I do something called profit planning to make sure that I have enough money set aside for taxes and for other fun things in my business. So go check out the video that I did recently all about managing your cash flow through profit planning. Now, if you found this video helpful, make sure to like and subscribe. Thank you, and leave a comment with any questions that you have about these new 1099K thresholds or any other content you want to see in the future. Thanks for joining me, and I'll see you next time.